morning and welcome to Business Morning. It's the second trading day of the last trading week of July. Fun fact, the final trading day for this month, that ends July 31st. And investors are watching for next signals that can shape markets, move currencies and influence business decisions. Welcome to the show. Let's get to work now. We see oil prices are down 1% today as market participants continue to weigh a pause in U.S. strikes on Iran, which has raised hopes of a diplomatic solution to their conflict and the normalization of the Middle East energy flows. We see Brent crude futures there. That was down about 54 cents earlier at $87.82 per barrel. U.S. WTI, that's West Texas Intermediate crude, that was at $81.95 a barrel. We see it there, 2% drops now, $80.35. That's for WTI crude there, 2.14% down. So the drops we did see kicking off the trading week yesterday, that has continued at this point. But let's unpack, what's happening in the global market, that's the global oil market, and the top central bankers' decision that's coming up this week. Mr. Bismarck Rewane joins us now via Zoom. Great to have you on the show, sir. Good morning.
Radi.
Yes, sir. Yes, great to have you, sir. So we see prices have been drifting lower, in recent sessions. Does this suggest the geopolitical risk premium is beginning to unwind, or are markets simply becoming more comfortable with the current level of risk?
No, I think what has happened is that the market has discounted to a large extent the volatility and the sound bites from the fact there's a balance between aggregate demand and aggregate supply of oil in the world, and the choke point, which is the Strait of Hormuz and now in Yemen, has actually affected to a large extent. They've discounted that, and therefore you've seen that at the peak it was $125. At the peak this time around, it's about $98. Now you're down to about $87. So the reality is that the markets have differentiated between what was a ceasefire, what was a memorandum of understanding, and basically what is a pause. So right now, I think the U.S. does know and does realize that a pause in fighting is not the same thing as a ceasefire. So I think that's very important. Now, what does this mean for our economy, Nigeria in particular? Every time the price of oil drops, it has an effect on our oil earnings, it has an effect on consumer inflation, and also has an effect on the value of the naira in the foreign exchange market. So as far as we know, and what we see, there is a question of because the price of oil has dropped, we should see by every $10 drop in the price of oil should actually have an effect on inflation. But our export earnings will drop by about 2.78%, and the exchange rate could actually weaken if this stays the way it is. But I think we have to put certain things in perspective. Tomorrow, the Federal Reserve Bank will announce its FOMC decision. Everybody expects the interest rate to remain the same. On Thursday, the Bank of England will also announce its decision, and it will expect to remain the same. So, what does that mean? It means that as the price of oil is dropping, because it's been people now expect that it's not in the best interest of the United States or the world for conflict to continue to erupt. Therefore, we are looking at a price of oil which will stabilize at about current levels, which is about almost $87, $85 a barrel. If that stays that way, now every country has to look at how it manages its own resources in terms of its resilience to remain completely insulated from those shocks. For us and for the audience here, what it does mean is that a $10 drop, which is what has happened now, will lead to a reduction in inflation. But we must remember that prices are sticky downwards. In other words, when the price of oil increases, it's very quick to affect us. But when the price of oil drops, people will wait a little bit to see whether it's going to be sustainable before they now begin to affect prices. So we do not expect inflation to decline sharply or in the near term, but we expect that our fiscal revenues, our export revenues, and the value of the naira will be affected if the price of oil continues to decline this way. But the good news is that, to some extent, our production has increased by almost 100,000 barrels over the past 3 months. Therefore, Nigeria's export revenues and macroeconomic stability is more sensitive to production driven prices. Okay?
All right. So definitely, you did mention the FOMC, meeting this week. This is one of the biggest weeks for global central banks. The Federal Reserve, they'll be deciding on rates Wednesday. Bank of England, following, Thursday. But it seems it's more of consensus expectations at this time. But what do you think would be the forward guidance? What do you think investors should listen to?
First and foremost, the Federal Reserve Bank under Kevin Walsh has said we're not going to be giving forward guidance because that's a speculator's dream. Speculator's dream come true. So what they're going to be doing is they're going to be focusing on their primary goal, which is that of price stability, and they're going to be looking at the unemployment numbers. Don't forget that it is exactly 99 days to the midterm elections. It's the Federal Reserve Bank is unlikely to make any move in any direction between now and the election, if not to be considered as trying to politically motivated decision. So we will leave the Federal Reserve Bank aside and know that what we'll be looking at is the European Central Bank, the Bank of England. If all of these central banks now decide to keep rates stable, it means that your foreign portfolio investors that come into Nigeria will, the incentive to bring money to enjoy the carry trade will be reduced because interest rates have stayed stable in advanced markets. And they'll be also factoring in the political risk of Nigeria that, okay, you have elections coming, no matter what the outcome, institutional investors and hedge funds and foreign portfolio investors are allergic to elections and allergic to risk. So for now, we'll expect that amount of flows to reduce. And to make up for whatever commitments we have, we might have to start looking at the Eurobond market for additional funding just in case. But the truth is that the buffers Nigeria has built so far, when you look at the gross reserves, net reserves, and the way the currency has been managed, gives us some comfort that we're likely to see any dramatic or precipitous moves against our currency and against our exports. What is interesting though, Ladi, just a minute, is that you will notice that both the price of LNG futures fell by 3% as well. Brent fell by almost 3%. And cocoa itself, which is a non-oil export, fell by 3.65%. So in the last 24 hours, we've seen our major exports fall in price. And now we are seeing the markets in South Korea today, the circuit breakers kicked in again because the chip makers and the AI phenomenon and hype is now the market is beginning to factor in that, right? Not all that glitters is gold, but the price of gold, as you can see, has also increased. So maybe it's time that maybe all that glitters is really gold.
Quite interesting. You don't want to see the prices of all your major exports actually falling at the same time. But I guess we'll continue to watch out for the effect of that. Thank you so much, Mr. Bismarck Rewane, MD CEO, Financial Derivatives Company. Have a great day.
Thank you for having me. Thank you.